delivering strong double-digit volume growth in Q4 is concerned, with improving realizations and margin expansion, that is. Now, management commentary is focused on capacity growth and cost control, though near-term demand outlook remains slightly cautious. But channel checks suggest price hikes have been rolled back. Ashesha, in fact, joins us to tell us what to watch out for the rest of the year. Ashesha, good evening. Over to you.
Well, yes, first up, let's understand how the cement sector is positioned at this juncture, and let's first look at the demand trends. In the month of April and May, remember, demand is usually on the higher side before the onset of monsoon, but this year we are expecting low single-digit year-on-year growth in the month of April and May, that is the months gone by, and this is because intense heat is likely to have impacted demand in the month of April, followed by unseasonal rain in the month of May. So yes, demand is likely to have impacted in the first quarter of FY26. Now, apart from that, let's also talk about price hikes. Remember, most of these mills or cement companies had undertaken price hikes in the month of April, but they had to be rolled back partially in the month of June this year, and they were not sustained. In fact, prices had to be rolled back to the tune of 10 to 15 rupees per kg in the month of June. So price hikes were clearly unsustainable. So that's the trend coming in. And remember, price hikes have been unsustainable for the last several times. Companies undertook price hike and they had to be rolled back. Let's also talk about the pricing trend. Remember, despite the price hike, on a quarter to date basis, prices are up 3%. They are at 18-month high levels, and on a year-on-year basis, cement prices have risen by nearly 4 to 5%. So yes, prices have declined, but despite that, on a quarter-on-quarter and on a year-on-year basis, cement prices have seen an uptrend. Let's also talk about several other triggers which continue to remain in focus for the entire sector. Companies continue to focus on reducing their costs, expand their margins, and expand their capacities, especially with respect to the top 5 players. UltraTech and Ambuja ACC continue to focus on margin expansion. Now, as far as the volume growth is concerned, in the quarter gone by, it was very strong. All these top 3 cement players reported double-digit volume growth. UltraTech at 17%, followed by Ambuja and ACC at 13 to 14% respectively on a year-on-year basis in the quarter gone by. Now, UltraTech Cement reported very strong set of numbers. Higher realizations and operating leverage aided this. ACC and Ambuja also followed suit. But remember, the capacity expansion plans continue to remain on track. Lower costs and higher realizations aided numbers for Ambuja and likewise for ACC as well. But let's also talk about the longer term trends going forward. Top 4 companies continue to focus on expanding their market share, and smaller players are struggling on account of this. As I mentioned, UltraTech, ACC and Ambuja continue to work on increasing their market share. They've done this for the last several quarters, several years, and this trend is likely to continue going forward as well. So yes, pricing continues to remain a concern for the cement sector, but smaller players seem to be struggling on account of intensifying competition and market share fight that has been done by the top 5 players.